Hello everyone, my name is Kapil Shah and you are watching Quick Market Analysis by FinLearn Academy. So first of all, congratulating to all of us as the market has picked the all-time high level and a very strong bull candle has formed in this particular month and in this week. So this is on a quarterly end, monthly end, and a weekly end. So on the month-on-month basis, market has closed on the 3.5% within a breakout, the closing breakout on the previous two peaks that we have seen earlier. So that was earlier in October 2021, then followed by again October 2022 or November 2022. So 1 year or two tops that has formed, and finally we have seen the good breakout on the high side. We believe that the market has given a very one-way upside momentum, the overvaluations kind of thing. But the one thing not to observe is that the market has given the breakout from the range, whatever the upside momentum earlier in this patch that we have seen. So this all got has digested. So let's say for example, this is what the bottom that we have seen. Market has picked up its momentum. So we have seen the 18 months upside one. So here you can see the figure. This is what an 18 months upside momentum that we have seen. So this 18-month upside momentum has been digested by how many consolidation patch? So again, this is what an 18 to 19 months. So equivalent amount of the upside momentum, equivalent amount of the sideways momentum that we have seen, and finally the prices has given the strong breakout on the higher side. So this is a breakout that we can see. It is not in a kind of the over exuberant state that we are able to see right now from the broader perspective. Now looking at a weekly chart, this is the 15th consecutive week where the market has seen the higher high and higher lows on each and every week. So let's say starting from this period, which every candles high you will see that it has happened on the whole side and the lows was on the high side. So this is in 15 consecutive weeks, except only one kind of thing happened in between, but this is a stronger move that we are seeing. And in this month week we have seen the exceptionally upside momentum by near to the 3%. Daily chart this week has been phenomenal because on the 4 days we have seen the continuous upside momentum within gaps, and as the prices are picking up its momentum and these gaps are happening in between. So based on the gap theory, this is something called as a runaway gap because prices are moving. So this is again one part of the strong momentum that we are able to see. Now looking at in the levels wise, so market has given the breakout from the it's old consolidation patch. So let's say this is what the previous high that we have seen, and some days back for the 5 to 6 trading sessions consecutive we have seen that market is hitting this level and it was acting as a resistance. Now the same resistance, which is 18,870, that has become the immediate support level. After the very extensive rally, there can be a profit booking round that cannot be ignored out, but market will remain on the positive zone in a very short term trading perspective. That is an 18,870, that is what the first support level, and a little bit we extend the view, then the 18,600 is the potential level where the moving average is also coinciding right now at this very point. So two levels from very short term rating, 18,870, and a little bit more than that is an 18,650. That has become the good base. Above this level, short to medium term outlook remains a positive. Now coming back to the upside potentials, now as we are entered into the uncharted territory, so there is no resistance visible on the chart, but yes, we can take the reference from the weekly options, which is in very near term, and we are forming the view for the next week. So in the next week we have seen that 19,500 is a strike price where the highest call base has been built up, and followed by the 19,200 level. So market has also touched the near about by 19,200 level before it has little bit sharp off, or today's high is around the 19,200 level. So that has become the very mild resistance, but there is no reversal sign, and the next best resistance that we are seeing is around 9,400 to 9,500 level on the higher side. So this is what in broader trajectory. Looking at a sector perspective, so if you remember that in a previous week we have been talking and focusing on the pharma sector, and in this particular week the one of the strongest sector that has emerged out is the pharma sector with a gain of a 4.33%. So which is very huge performance that we see, followed by the auto stocks are also into the momentum, IT stocks are also into the momentum, which is close near to the 3.5%. So these are the sectors which are into the demanding side. These are onto the leading side. Pharma IT stocks has not been that much flavor into the earlier time, but this is having the catch-up rally right now. The things are moving quite well on the pharma stocks. It is looking a little bit more visible stocks. This is how the performance are unfolding the positive momentum dealing. IT stocks may take us some sorts of a time. We are seeing some sort of divergence. Some of the large cap companies are doing okay kind of thing, and mid cap companies are having some sorts of tractions. It may have a little bit slow and steady move, but yes, the pharma stock is ready to pick up its momentum, and the things which are already into the existing shape, that is in auto stocks, it is continuing to do well in the coming time. It is likely to do well. And the underperforming sector that we have seen from a very long back, that we have been talking about, media stocks and oil and gas or energy stocks, they haven't been picked up well. So the underperformance continued over there. They have ended on the positive note, but underperform in compared to the other peers average and broader indices averages. So they are below the performer that we are seeing. Now, interestingly, whatever the sectors that has performed, if we have to take some sort of stocks out of it, so let's say the Nifty Auto that we are talking about. So in a Nifty Auto, if I talk about one stock which there is a good formation is happening, that is an Escort. Fine. So Escort, it was under my radar for a longer time. Prices has been under the higher and higher low sequence on the monthly chart. On the monthly chart, this is what my favorite combinations. Stock prices is under the corrective move. That means a little bit discount sell in a broader positive trend. It touches the moving average, and after touching the moving average, prices breaches the falling trend line on the high side. So it had happened on the weekly chart. Prices has given the breakout from the couple of weeks base. So 1 month it has been consolidating, and this week we have started to see the again emergence of upside momentum. On the daily chart, we are seeing that the stock price has started to uh, form a step-by-step structure. So this is what we call as in a stair-step structure. So this is what your first step, this is what your second step, this is what your third step. We see some sorts of once the breakout happens, so we see the couple of days upside momentum on the high side before it fizzles out. So this week the prices has given the breakout above the third step. So we expect that the next best upside potential can be the next best reactions, that is a 2350 level, the previous peak, and auto stocks are under the positive momentum. And whatever the 2 days low that we have seen, 2780 level kind of thing, so that becomes our a stop loss if the price moves below this particular level. So that is a stop out case for us in a very short term trading perspective. And on the high side, 2350 level can be the upside potential. This is what the discussions again we are doing, that is for the educational purpose. This is not a tips and advisory from our side. So this is what the technical formation that I am witnessing. So let's have an eye on this stock for the coming week. Apart from this, let's say if IT stock has started to pick up its momentum. So in a large cap, they are not under the momentum, they are not the flavor of the market right now. But still, if we have to choose any stock out of the large cap stocks, then that is a HCL Tech, which has performed better as compared to the other stocks as well. And in this week or month, so let's say this is a monthly chart and this is a month end as well. So here I am seeing the breakout above the couple of months. I think 6 to 7 months it has struggled out over here, and we have seen the breakout. So of course we can see the same breakout on the weekly chart as well. So this is the resistance breakout happened. Daily chart prices went up little bit, came down, retested the earlier breakout level, and then it has picked up its momentum. So there is a good amount of the so there is a good development that has happened. We are not too much optimistic on this, but yes, from a very short term trading perspective, this is what the first upside potential that we are able to see, 1220 level. And then if these particular levels are able to iron out, so the further momentum can be around this particular level, that is in 1275. And as far as the stop loss are concerned, what is my immediate low? So this is what my immediate low is, that so that can be considered as a stop loss. Or defensively, this is what my immediate support levels are there, 1146 to 40 point difference from the current market level. So below this particular point we can consider it as a stop out point for it. So this is what in the HCL Tech that we are seeing, considering the target 1 and target 2. There are some mid cap stocks are also that we have which is doing well. So let's say LTIM is a one particular counter. Again, in the same formation we are seeing this particular stock has converged, and I look to like those particular patterns which has given a mild breakout. It has failed once, and then without creating the further damage to the support level, it starts to emerge on the high side. So the same structure that I'm witnessing on the LTIM. On the weekly chart, if I see, this is what a very long rectangle consolidation pattern that we see. Prices has been consolidated in this particular range for almost 49-50 months. So that is very much near to the 1 year consolidation patch, and the breakout is happening. Earlier also the prices has couple of times tested over here. It didn't got a breakout, but in this particular week we have seen the upside momentum. On the daily chart, prices has already picked up its momentum, retested, and it is started to find some sorts of traction on the high side. So here I find that mid cap stocks from the IT space, they have started to do well. So if the prices are picking up its momentum, so my next best upside potential can be around the 5,571 level, and 2 days low or whatever the support level that I see, 5050 below, little bit lower to that, that become my stop loss in this case. So these are the various case studies that we have also seen from the educational perspective, where you can have an eye on the Escort, LTIM, and HCL Tech for the coming week. Fine. So whatever the discussions that we did, that is for the educational purpose, and see you in our next video. Thank you so much once again.